Welcome back to the Wyckoff Crypto discussion, our weekly market update totally devoted to cryptos and the Wyckoff methodology. This is episode number 9. As usual, feel free to leave us any comments under the video. I'll personally answer all of them. All your trading idea, questions about Wyckoff method are welcome here. This information is for educational purpose and it's not an investment recommendation. Please stop the video and read the disclaimer. So in the last episodes, we have anticipated a retest of the 38 price level. Bitcoin has hit our target, outperforming the market, not just the crypto market, but the stock market as a whole. And now we are facing a very natural point of resistance. So what's our strategy now? As usual, first we identify the most important resistance levels of the chart, and then we closely watch the levels of supply that emerge on these crucial spots. In this case, the long-term price level resistance, 13.8, forms an important resistance cluster with the overbought line of the uptrend channel started in early May. The supply tails that we had in the last week on a local increase of volume warn us that some profit taking at this level is occurring. And in all of these classes, Roman always invites us to think in terms of analogs. So the area at point 1 suggests a great analog for the current price action. How much supply we will encounter in area number 2 compared to this analog? How much time we will be able to spend in the top half of this important channel? All these questions will be important to build our plan for this week. And last but not least, it looks like we have an elephant in the room, and its name is the S&P. The fact that Bitcoin has outperformed the S&P in the last few weeks is not a good reason to think that crypto markets are immune to any kind of shakeout action. Never ever underestimate the gravity of the market. And Roman, in the last week, we have discussed the scenario of a shakeout in the S&P, and just yesterday we had a nominal SPAR with high volume and large spread to the downside. Today's price action is very interesting. So could you explain to our audience what was the rationale behind your call, and more importantly, what do you see on the S&P or the Nasdaq today?
Well, the call itself was, somewhat easy and hard on actually from both sides. The easy part is that this was a lower high within the construct of a much larger trading range. So we know in the trading range we're going to have those fluctuations, right? So whenever we have that failure somewhere on one of the swings up, this is where we expect the price to go back to the level of the support. So from that perspective, an easy call. What was not easy is the way of how supply was kind of like in the hiding a little bit. It was more consistent than spiking, and that's what was so confusing in this area. But I think that the demand signature that does not allow us to see any meaningful rallies right here suggested in continuation to the downside. And obviously, as we go down and we are expecting supply to increase, we're expecting also momentum to increase and kind of have accelerating action into that area of the support. There are multiple scenarios that we could build here. We could, most bullish would be just this, just an apex formation and continuation to the upside. That's scenario number 1. The second bullish scenario is where we actually go below this level where we've stopped multiple times before, and then we recover from there and still create some kind of bullish structure. The most bearish bullish scenario is going to be based on, let's say, worsening of the coronavirus infections around the world, and we really deep down to the 3,000 level, and then we build the structure from here and kind of recover from here. Well, whatever is going to happen, what needs to be done whenever we are in the area of the support is the biggest question, do we have any confirmation on the intraday level that we could possibly be doing some kind of recovery and reversal? So with that, let's quickly go to the intraday, and I'm using NASDAQ here I'm showing you the whole structure since the September 2nd decline. This is 1 hour chart. Please note right away that technology is actually holding much better, and this is again, going back into the stay at home economy type of thing. And it's a higher low here. So after the climactic run into the oversold condition, those are the conditions where we would be looking to establish some kind of observance or watch for the change of behavior. So we would go to the actual trading range right here and try to decipher what is going on there, what would be on the smaller time frame, any type of confirmations of the change of behavior. And what do we see here? So on the climactic run, shortening of the thrust, so that shows inability to commit significantly below. Then the Asian and European session actually have a bullish bias to it into the slightly higher low during the European session. And the US session starts with the upswing and then goes down into another higher low. So bullish scenario, no latest confirmation that it can overcome that high, another bullish sign, and then we are holding on the top of this intraday structure, which is also somewhat bullish. So the key here for us is to have that final confirmation, and that would be overcoming 11,340, 11,350, and that confirmation, that breakout would suggest that possibly we have stopped the movement down and now we are in some kind of reversal mode. And just looking at the overall intraday structure here, so very dynamic rally up after a local spring right here for the structure, and then holding, and that's kind of like the key for us, is to hold at this level and not to go down. Back to our slides on cryptos. Alyssa, you were talking about some analogs here, so maybe something that we could talk about as well.
Yes, number 2 and number 1. It's very interesting analog.
And I would probably be thinking, and I wonder what you think about this, we have slightly less supply at the higher level of the same contextual bar. And we would be thinking that in the area of the resistance, we would have more supply coming in. But this is a really good sign. This is suggesting that, we might potentially hold here. We might potentially actually break above 14. Our call, back here was that we're going to go to 14,000 and overcome it slightly. So I'm still kind of like thinking that if we go into this type of this scenario, this could be the way of how it just overcomes that a little bit. And then, of course, the key is going to be, if we're holding here, could we establish a new stride for the uptrend? Could we hold and then start getting the momentum up and go to the next targets that are going to be all around, the all-time highs around 19 and 20,000? Alessio?
Yes, that's a very, very interesting scenario, because at that point we should have some kind of acceleration. So I think it will be key to watch the price action of the next few days and judge the two analogs. And very, very interesting scenario, man.
All right. Well, when we look at the overall market, Alessio, I know you have a very interesting thought here. Bitcoin is obviously outperforming, but what about the rest of them?
Yes, as you can see, Bitcoin is marching alone here. So all the other indexes are not participating in this rally. The crypto markets, after the massive speculative rally that we had in July and August, are still in risk-off mode, and this is very important. So the altcoin index, which represents large caps, was holding much better than small and mid caps. But look at the price action of the last few days. A lower high while Bitcoin was making a high. This kind of a divergence is warning us that institutional participation in the crypto market is getting smaller and smaller, and we probably need time and volatility to build a bigger cause. So volatility that could come in sync with the market triggers some final capitulation and let strong hands absorb the supply at lower levels. So look at the SHIT perp and the mid perp indexes, especially the SHIT perp index, which is the most speculative index, is not participating at all. Lower highs, lackluster rallies, there's no institutional presence whatsoever here. So if profit taking will impact the crypto market, small caps, I think they are in a vulnerable spots. So what are your thoughts on this chart, Roman?
Yeah, I'm not going to add a lot here. I think Alessia, you did a great job here. It's just very interesting to me, but very reminiscent of how the stock market behaves as well. You're going to have certain themes that are going to be flight to safety, flight to quality during the times of uncertainty, and then others are going to exhibit less relative performance and will be underperforming. So it's important to understand the concepts of relative and comparative performance and just to follow that within the construct of your trading plan.
So here we see the Defi index, which is very similar to the shitcoin index. So I want to show here an important analog. At the top, we have the Defi index daily chart, and below the weekly chart of Bitcoin in 2018. As you can see, decreasing volume and volatility to the downside are not necessarily bullish. So what do you see here? Decreasing volume, a series of lackluster rallies, demand is really poor. Institutions have quickly sold their assets out of the top, and then they just run away from this highly speculative market. They are not participating. There's no evidence of institutional presence now. And usually, lower highs suggest a break of the support. That break could trigger a final capitulation, and that could be the spot where strong hands can come back again and absorb the supply on the way down. And this is what has happened Bitcoin in 2018, and this could happen again on the DeFi index on a smaller scale. So we will follow this analog in next episode too. Roman.
Yeah, I really love this analog, Alessio. That makes a lot of sense. Again, urgent selling on the way down. They just want to get rid of everything at the same time. And you could see how usually that type of action from 20,000 to about 6,000, I believe that was the low here or around. That's a significant move to the downside, and you see how they are selling urgently during this period of time. Well, the same is happening with the DeFi. And again, this very good observation by Alessio on the character of the rallies that have no demand behind it, and that is also being confirmed by the volume signature itself. And as he said, usually will resolve itself with some kind of stopping action, because this is the point of long-term value. And this is where they're going to come and they're going to say, yeah, now the prices are so depressed, nobody wants this asset. I'm going to come in and I'm going to start buying, and that's going to absorb the supply. So extremely interesting analog, Alessio.
Great. So let's focus on Ethereum. We have analyzed the long-term structure of Ethereum in the last crypto discussion, and the long-term view is still very, very interesting. We are in a possible backing action. That said, Ethereum, we have seen the divergence on Ethereum and the altcoin index between Bitcoin and major caps. So if Bitcoin was still making higher highs this week, on the daily chart, we see that some supply is emerging on Ethereum right on the level of the local resistance at 0.1, and we are making a high compared to the local resistance here, but a lower high compared to early September. So let's look at the two down bars that follows this failed attempt to overcome the resistance. Bar number 3 has the same volume of bar number 2, but we close slightly lower. So same effort to the downside, weaker result. So I think that these two bars are warning us that demand is deteriorating. In the short term, I think it's possible to revisit slightly lower prices, at least temporarily. And this is a typical pattern that we usually see in a speculative market. Acceleration to the upside in phase D, and then some kind of deep retracement on the last point of support. Speculative markets very often retrace in a deeper way in phase D because this is the nature of low liquidity markets and younger markets in general. We quickly go back and forth from risk-on mode and speculation to risk-off, profit-taking, and almost instantly, institutions fly to safety. So this dynamic usually produce extreme price action on both sides. And I think at this point, we have to be very, very tactical, Roman. What's your view of this?
Yeah, I would agree here, just because, this supply that comes on the way down is very important. So we are within the body of this big bar, big supply bar. Supply, as you said, comes at 1, and then we still have some supply that is available here. And then if we look at the bigger picture, we are basically in some kind of trading range formation, I think. This is a good analog to compare to. So the bars that would catch our attention as the change of character type of bars are these ones. And look what happens, the difference between what happens back then to what happens now. So now it's much more bullish. It happens at the higher level. So supply allows us the price to go to that level, and then it occurs. It doesn't occur maybe, with the same intensity as we've had into the actual high. We could see this from this volume signatures on the climactic run. So it looks more bullish, but I agree with Alessio. There is a little bit of the supply that needs to be observed at this higher level. So there might be some kind of vulnerability to have a reaction. And I would just observe this action. There's nothing else to do, Would supply be observed or not? That's the biggest question.
So let's try to see what kind of PNF targets we have here on the intraday PNF chart. So this is a 1 hour point and figure chart of Ethereum. Percentage scaling, 5%. Look how much count has been generated at the bottom during the COVID reaction. Now we have hit the target, major consolidation started, and look at the cumulative volume increase that we have at the left of the chart. There is supply here. And so even though this distributional count in red is not confirmed yet, let's try tactically to project the last segment here. And as you can see, the PNF distribution count is pointing to the 246 price level, which is a significant correction, but still in line with the possible last point of support. Even after such a deep correction, we still would be above the support of the big up bar that has so much volume there. And that support is our danger point. Until we are still above that level, this price action is still in line with a long-term bullish picture. What's your view on this chart, Roman?
Yeah, I like your analysis here, Alessio. This bar is definitely the bar to watch. So the boundaries of this bar define where the price is going to spend a lot of its time. What's encouraging is that right now the price is spending majority of the time above 1/2 of that bar. So indefinitely, even with the downward objectives like this, we still have to watch the tape itself and see if that's going to happen. We might have the reaction, we might have it, to the point where the price has stopped before, recover, consolidate here. So I think, as you say, it's all tactical at this point, and that's what I would be looking for.
So in the last week, I've received a question from a student of the tape reading class that Roman is conducting. So his question is, this is an historical chart of Ethereum just before the COVID reaction. How do you recognize the change of behavior in this formation? In particular, how do you recognize early distributional signs on the apex formation in the middle chart? And Dragon is saying here, I cannot see any evidence of distribution on the top here. I think this is a very interesting observation from the tape reading point, Roman, because Ethereum in early February will still outperform the market. And look at the chart. We do not see signs of a high volume off the top. Institutions were not building a cause for distribution. What really happens here is that all of a sudden institutions stop buying Ethereum because the S&P is red, and they switch to risk-off mode because of the COVID crisis. So at point one, we do not see a lot of volume, but price fails to commit to the top of the big down bar where selling a scam. And this is a first warning. And then the same pattern repeats over and over. And each time volatility contracts, price recovers, but then fails to commit above the last significant supply bar. And this is a classical tape reading case that tells us that where we are in a downtrend in the market, the lack of demand is important as well as the presence of supply. And especially when we see a wave of selling in the market, some capitulation, liquidity event, we have to be on our toes and recognize any signs of ease of movement to the downside or lack of demand. What do you think about this chart, Roman?
Yeah, a very good question to the student who was asking this. And Alessio, thank you for your explanation. I would agree with Alessio that just being an outperformer before the COVID-19 reaction suggested that there was no thought of the potential distribution at the point where the price action started to unfold with COVID reaction. We just don't see it that much, right? So there is some selling. It's somewhat subtle. I wouldn't be saying that this texture of the price movement is extremely bearish. It's just a change of character. It doesn't, take all of the gains of the last climactic run. So at this point, we still would be thinking possible reaccumulation, possible trading range. The next supply is a little bit more disturbing. And I think that this is where we start paying attention, to how the price recovers above this level. And it just doesn't. So the break here and the next subsequent increase in the supply signature, I think this is where we will start thinking, wow, something wrong is going on here. The price does not stay in the trading range, does not continue to the upside, but actually on the increased supply signature starts to go up. So to me, this seems like a major change of behavior, whereas this was more of a local change of behavior suggesting a trading range. So then after that, we're thinking, okay, well, supply occurred somewhere in this area right here. Would we recover above that area? Well, first of all of the rallies are very, very weak. And then the last rally on the excitement into phase C definitely cannot overcome the area where the selling was at its peak. So that non-recovery and subsequent increase in selling and how the price reacts to that. And please note how the texture changes here, right? So volatility increases, downward spread increases as well. So this is a call to action. This is just basically saying reaction at this point. And obviously on the background of everything what's going on at the beginning of March, you probably already want to be somewhat cautious, move your stop losses closer, not to allow unrealized gains, to be lost. And obviously this was very weak rally. There is really nothing else here but just attempts to go up and just such failures. So that is suggestive of not only continuation to the downside, but increase of the capitulation volume, increase of the momentum with that, and perhaps, just like source of funding at that time. So a very interesting chart. I would say that I wouldn't be relying just on one pattern here. I would be relying on the whole story that unfolds. So the story unfolds as point number one, supply is becoming a little bit erratic. Point number two, a major change of character. Point number three, a failure again. And then point number four, the rally that cannot do anything but, just be weak. So think about the Wyckoff story as it unfolds throughout the whole chart. Alessio?
I really love all the submissions from our community. I think that they are great case studies.
Absolutely. So yes, please do send Alessio the questions, and we'll be happy to go through those through real-time examples. All right. Well, with that, Alessio, another episode of Crypto Market Discussion is done. Really enjoying this series. And for those of you who would like to see this material, these videos, and Alessio's blog on your platform, shoot us an email at wyckoffAssociates@gmail.com, and let's figure out how we can do this. Alessio, thank you so much.
Thank you, Roman. It's always a great pleasure to discuss the market with you.
Sounds great. Until the next episode, thank you guys, and bye-bye.